Okay, so just a trade performance overview for the day. Uh, just from this past week or two, we've had some really wild swings. Like, for example, the 18th and the 20th were just really rough days, where we had a really big slam down on the 18th, and then we had a really strong reabsorption or just like engulfing on the 20th, and then all through this week was just kind of crazy upside and just a reclaim of the highs and made, I think we made a new high past the previous peak. So it's just really wild, and just reviewing and reflecting on those 2 weeks. I was really keyed into the institutional bias, and it was bearish. It's roughly leading by a week or two, so it makes it difficult when you're trying to anticipate a fade, and you start to have the bias affect kind of your trading and risk management, and you start taking some weird kind of risky bets that are outsized, that are not appropriate. But when it came to today, it was a lot better. We didn't get the market structure break we want, which is a 12-hour market structure break, but we got a 4-hour, which was the next best thing for beginning the the journey to breaking the 12-hour market structure break, which would be significant for a near-term basis, and then the weekly market structure break is like really significant. But right now, we're just kind of taking account of the performance. We've passed two evaluation accounts of the 50 grand, which doesn't mean there's 50 grand in there. It's just an account. And the overall meaning is that if we put in $240, we got out $2,500 potential to trade. And we also got access with the performance account to a wide range of instruments, including Bitcoin, which is the best asset this year, which we are looking to trade. But ideally, we would like 10 accounts, 10 performance accounts, and each account to be at $12,500 each. Because once all accounts are $12,500 each, there's a net of 100 grand potential of trading. And with every 2 weeks that we could withdraw, if we were to make over $2,000, we can withdraw $2,000. And then it comes down to the feed and seed problem, which is like how much do we use to feed ourselves and how much do we use as seed for the future. And that's going to be an interesting kind of ratio going forward, like how much we're going to just really put forward to growth versus all the others. But I do think there is like the two kinds of growth with these accounts. One is like lateral, which is number of new accounts, and then vertical, which is the number of growth inside one account. And I would like to think that maybe every 10 grand, 10% gets dedicated, or maybe 100 grand, 100 grand or 10 grand, I don't know, like 10% gets dedicated to new accounts on a holiday or a sale of 50% off or more. So that's what I would like to do. But first is getting the first batch of at least 10 accounts to $12,500 each. And so far, we've got 2 accounts passed, and we got 8 more on the way, or 6 more on the way, I think, if we were to count them. 1, 2, 3, 4, 5, 6. So a total of 6 on the way, 8 total. We're almost on our way to 10. But the goal would be to get 10 of them to $12,500, and then we would do the same exact strategy we would with the risk per trade, which is 1% or 2% maximum for the risk per trade, and that would be our withdrawal per period. It counts as a loss when we withdraw. It's the feed or seed problem, and it's another kind of risk management that we have to do on top of the risk management we do with the trading. So it's very interesting how that goes. I've taught advice as to just kind of how to go about withdrawal and how to manage, prevent risk of ruin to the accounts. And the best way is either, from what I've heard, get the average of the performance for the year and just kind of expect that, and you could charge that as a fee, as like an aggressive fee, or you could do per month kind of performance basis, and 1% or 2% of if you hit 100 grand or over 100 grand off the top, 1 to 2% off the top. So that's kind of just the overall performance of what we got, and just kind of where I'm going. And we put into place things that would help just even out this equity curve, because this equity curve is just wild, and it's got some high peaks and low valleys. And the goal is to make sure that that doesn't swing that wild, because the wild swings is what would make it closer to being more fragile to becoming an account of risk of ruin, or having accounts of risk of ruin. And the goal is to just smooth that out, and that's kind of what's put in place on the position sizing, the type of entry, how fast it is, and just the position sizing with that, and then the type of risk to reward trades we're taking, and then how we would grow from there. But we have to start conservative to be able to have a base to build with results on the win rate. But this is the overall progress, and the goal is to pass 2 more of these accounts here. I have to put them to 53 grand by February 4th, which I think is totally doable, and it would make the investment a 10x investment, which would be $240 to yield $2,500 worth of trading, capital buffer. And that would be a 10x, and it would be 2 accounts that would be 10x. Now these other accounts would also the 4 that have been bought with the promotion of 80% off. Those 4 themselves, I think, would also be another what's it called, 10x, or it would be even more than 10x. But the overall goal, just keep scaling, keep the ability to scale on our side, and make the losses small and the winners big.